first time in 3 years, prices of housing nationwide have dropped, specifically for condo units and duplexes. Data from the Bangko Sentral shows that the Residential Real Estate Price Index, or RREPI, dropped by 2.3% in the third quarter of 2024 to settle at 163.9. This is a reversal of the sector's 2 quarters of positive growth. The index's last significant contraction was in quarter 2 of 2021 at 9.4%. The Bangko Sentral uses the RREPI as an indicator of price changes across housing types and locations to assess market conditions for credit and real estate. So everyone wants to know where these houses are, but also what do these figures mean for would-be homeowners and the banking sector that heavily deals with residential properties. We have with us tonight someone who knows real estate very, very well. David Leechiu joins us. He is the CEO and co-founder of Leechiu Property Consultants. Welcome back to The Big Story, David.
Hello. Thank you for having us in your show. Thank you.
David, so the report that I read, those data reflect the numbers coming from the Bangko Sentral, but I know that Leechiu Property Consultants also comes out with a yearly property report, even quarterly at that. How do the numbers jive with your own report? And you called it a buyer's market. Tell us more.
Yeah. Okay. So first of all, we have to understand that the basis of the central bank is on home loans. So it doesn't capture the entirety of the market. There are many assets in the Philippines that are being purchased without any debt, even in the low end or in the mid end, because of the overseas remittances funding that. So it is not capturing the entire market. Second, they cited and so I think a lot of the lower prices reflected in this benchmark is because banks are becoming more and more conservative. So they're pricing the assets, they're valuing the assets at a much lower base, so that they lend at a much lower they lend at a much lower base. So instead of them lending 60% of the market value, they will lend at 50 or 45% or 40% of land value, and that will also tell you that might show that the prices are coming down. But from what we see in the business, most prices are holding, definitely in the high end and definitely in the low end. The middle end of the market, which is a small piece of the equation by volume, is softening. It's softening because of a number of factors. One being the supply, because we've built a lot, and because of COVID, a lot of projects are delayed, and so most of that volume, most of that supply is being completed now instead of like a year or two before. So it's very typical because of COVID for projects to be delayed by 1 or 2 years. The second thing is that because of COVID and the high interest rates and high inflation that we've been through in the last 5 years, the middle end market is really getting hurt now. It's like they're getting tired of this marathon of real estate, meaning these factors of COVID and
Inflation.
interest rates and inflation is wearing them out. And so the biggest burden of the middle class is really their home loans. And so many who have speculated or purchased are trying to cut their financial burden by offloading assets. And this wear out is being coupled by the big supply that's entering the market today, especially in the mid-end condo market.
Oh, David, a lot are blaming this on the Pogo ban. Does this have anything to do with what's happening now? I mean, is it a major factor as to the real estate decline?
That's a good question. So yes, the Pogo ban has introduced a new level of job insecurity, and because of that, a lot of people who speculated or are renting are now trying to vacate places they're renting. For example, the Pogo sector employs tens of thousands, if not hundreds of thousands of Filipinos. You know the car dealers
Yes.
that you see in the Pogo sites. These are maybe 98% women, and these women are paid anywhere from 50 to 80,000 pesos a month, and all they do is stand in front of a camera dealing cards for 7 to 8 hours a day, and that's a very very healthy, very nice salary for a person, and all that's gone now. So they're struggling. There's a very big chunk of the market employed by the Pogo sector that is scrambling to replace that income, and because of that, a lot of condos are being vacated because of this job insecurity that's going on because of this Pogo exodus. We have a client that owns 1,000 apartment units, all in the mid segment, and the rents have come down by 60%, and it's struggling therefore for that client to now pay for their amortizations because of the low rents.
Okay. David, one more thing again, no, to compare maybe perhaps some things from that BSP report with the real picture on the ground. It said there was data that in the NCR, residential properties, declined, or the demand and the prices declined by about 14%. But outside the NCR, prices are actually going up a little bit by about 3%. Do you see this to be true on ground as well?
Definitely, because much of the supply, the excess supply, is happening in Manila, in NCR. NCR plus Mega Manila. So if you count Pampanga all the way to Batangas, that geography is about almost 60% of the GDP of the country. Such a small part of the Philippine geography, and yet it comprises 60% of the GDP. And so much of the economic activity, including real estate, most especially real estate, is happening in the NCR. So the supply is really, really kind of crazy in the middle end of the market. So by middle end, we define that as anywhere between 3 million pesos to as high as 20 million pesos. So assets in that category, there's quite a bit of inventory.
Are you talking about condos? To be very particular, is it condos that make up majority of the oversupply?
Yes. Most of the oversupply is in the condo sector, and I think that will be temporary. In our view, there's about 3 years worth of supply in the market, and what that means is that it'll probably take maybe 20 months, 24 months for prices to stop falling and to kind of find a balance, because you don't need all that space to be wiped out. You just need a significant amount of that space to be either leased out or resold.
Around how long before we see that correction? I think I found some data from Colliers as well online, and they kind of see the recovery to at least pre-COVID levels happening by the second quarter of 2028 or somewhere the third quarter of 2029. Is that really going to take that long?
No, I think it's going to be much faster. So we think that rents are falling very quickly since the Pogo ban, all across the mid-end segment of the condo sector. Actually, in most parts of the residential market in the mid-end, most of that's already declined by as much as 50-60%.
Wow.
Okay.
Huge.
Prices, so capital values are softening by 20%. We think that it will keep softening to as much as 30-40% in the next 18 months to 24 months. It's going to find a base or a floor in the next 24 months, and then it's going to start appreciating probably in the 30th month. And I say this because, number one, demand will improve. Demand will improve because of the job growth that the Philippines continues to experience from many sectors, primarily in the BPO sector and in the tourism sector. Second is that interest rates are softening all around the world, including the Philippines. Number three, inflation is coming down to more manageable levels. And and fourth is that the supply of condos are coming down very, very quickly. So these four factors are going to contribute to stability in the property market sooner than what most people think.
Well, actually, David, even with prices going down, a lot still find properties unaffordable and quite expensive. How do you think the market can address the affordability issue in terms of primary houses or even in the mid-end or middle-end market?
So I say this I'll answer that by saying that many developers have already stretched their terms to very fantastic levels. Like you can pick up condos now, rent to own, meaning they will allow you to move in and rent the apartment for 3 years, and then apply some of your rent into payments of purchase for the unit, and then they hope that in 3 years' time you would be in a financial state where you can borrow money at a reasonable level and pay for the unit.
David,
And if you're not able to do that, they will still allow you to rent for another 3, 4, 5 years, and then some part of that will be partial payment for the purchase. We've never seen terms this generous by developers, and so we're saying to the market, to the public, you should take advantage of this phenomenon. The problem is, people people like FOMO, and if you don't feel like you're experiencing FOMO, they don't move. For example, when prices are going up and supply is so scarce and everyone is buying, people want to buy, and that contributes to the rapid appreciation of prices. And when price and then on the flip side of that is you've got terms this good, and still nobody wants to pick up assets, because nobody's buying. It kind of propagates this notion that maybe they should hold off buying, when in fact we should all be contrarians about the market. So, to quote Warren Buffett,
off
you should
the
be
way.
quite bold when people are fearful.
And speaking of that, what are the opportunities to take advantage of? I guess your advice for those who are looking for homes, that's number one. And the second one is for those who own properties in the mid-end market.
Yeah. People have to remember that on both sides of the fence, from tenants and buyers and developers and investors, that property is a long game. It's a long game. It's not a quick fix. And so, yes, we're saying to people, buy assets now, right? But they don't want to buy assets now. We're also saying, when you buy assets now, do not expect like tomorrow, next week, next month, next quarter, you're going to make a 20% gain. It's not like that. It will take time. But as I've seen in the last 60 years, real estate has been the best peso asset class. And it's very tough to beat that. Very, very tough to beat that. And so very few stocks can give you the returns in the last 60 years the way real estate has for most investors. And earlier somebody asked how people will have to afford it. Well, we just all have to, number one, work harder. Number two, be financially astute so that we don't throw money at stupid things, and we save and deploy and invest that money so that it turns faster. And then we go into real estate. Next is that we have to appreciate that today has been some of the best times to borrow money. Compared to the last 60 years, this last 4 or 5 years, 6 years have been the best, because we've had record low interest rates up until maybe the last 24 months. We had the spike of interest rates everywhere, and that's a phenomenon everywhere. But we think it's going to come down, and so this period is some of the best times to borrow money. They have single-digit interest rates, like as low as 6-7% today. and they're the longest you can fix them for. Unlike in the 80s or 90s or even in the early 2000s, where interest rates were prohibitive and you couldn't borrow sensibly over a midterm, like 5 to 8, 10-year period. Now, interest rates have been very, very manageable.